Let's reflect now on the breaking news. South Africa's economy is shedding some of the growth which was gained in the first 6 months of the year, with GDP falling by 0.2% in the third quarter. However, according to Stats SA, the data over the period gives no clear indication of the direction that the economy is going. 5 of the 10 economic industries registered declines, while the other 5 showed muted growth of less than 1%. Let's speak now to our business editor, Xolani Mbanjwa, who is in studio with me. Xolani, good morning to you. And not good news that we are going to reflect on for the first time in 2023. The GDP, or should we say the economy, contracted in South Africa. Let's talk first with or about the negative contributors.
The negative contributors, good morning, Oli. They're quite surprising because when you've looked at the previous data that has come out, this particular sector of agriculture, forestry and fisheries industry has been doing very, very well. At one point within the past year, we've seen agriculture being the only silver lining in a sea of red in terms of performances. But this time around, as part of those 5 industries that we've just spoken about, that of the 10 that contributed negatively to this particular third quarter, we find it there having decreased by 9.6% in that particular quarter between July, August and September. And that's a contribution of minus 0.3% of a percentage point to the negative GDP growth. It's a big, big worry because economic activity has decreased. We've seen intermittent stage 6, stage 4, stage 5, and that ratcheting up. It's something that has directly impacted on how certain sectors are actually doing, and people have no other choice. Many other businesses have no other choice in this environment but to close their businesses.
Let's then reflect on positive contributors. Were there any?
There were. When you look at some of the industries, manufacturing was one, and it's an important one when it comes to the primary sector in the country. And manufacturing, although it decreased by 1.3%, and its contribution was minus 0.1 percentage point to the overall picture, they were still not as bad as the others. When you're looking at transport, they did well. Public transport did well. The number of jobs created in the civil service, government is creating jobs, which is a bad picture for a country like ours. You need the private sector to be creating the jobs that are needed. When it comes to the jobs that were added, according to this data, government was the one that created the jobs. So the other sectors, 8 of the 10 manufacturing divisions also reported negative growth rates in the third quarter, and it's something that is worrying as well, that construction also decreased 2.8%, mining and quarrying also decreased, accommodation, catering, which are normally also the stable alongside agriculture, they also contracted 0.2%. So it just goes to show that load shedding, coupled with the high interest rate environment we have, the runaway inflation, as well as the issue of port congestion, the logistics problems that we're having, nobody is actually seeing some green shoots here. When it even those that have done well, it's also been very marginal. Putting them all together, it's less than a percentage point.
Let's talk about the investment space. There are some worrying signals there that you and I were talking about off air. What specifically is a big warning sign, or should we say red flags, when it comes to investment into the country?
It's a number of issues. It's what is normally mentioned here as total gross fixed capital formation. It's been on the downward spiral, but I don't think it has been down in a single quarter by 3.4%, which is what it was in that particular third quarter. And the main negative contributors, we're seeing a decrease where machinery and other equipment, transport equipment, contributing as minus 0.7 percentage points, and also other assets as well in construction works. Those type of investments are actually contracting, and they are contributing negatively to economic growth. It's something also interesting that in the latest financial stability review that was released last week or a week before last by the South African Reserve Bank, they mentioned the investment parts of it, that they are seeing a lot of foreign investors pulling money out of South Africa at a higher rate than before. Billions of rands this year already. I think the figure was standing at 98 billion rand since the beginning of the year. That should worry us, because if we can't convince those who have deep pockets to plow their money so that we can create jobs, it's all useless. But as some will always say, even in this low growth environment, South African businesses continue to thrive somehow.
Xolani Mbanjwa, our business editor.